Welcome to the 2015 Enercom Oil and Gas Conference in Denver, the 20th year of the conference. I'm Angie Austin with Oil and Gas 360. We're joined by Yuma Energy's Paul McKinney. He is the Executive Vice President and the COO of Yuma Energy. Welcome.
Thank you for having us here. We really appreciate your interest in Yuma. We've got a great story we'd like to tell, and thank you for the time that you're sharing with us.
Well, and I know you're very excited, so I'm going to give a little bit, with your story, you want to get it out there. I'm going to start with a little bit of background. Yuma generated 225 total prospects from 1983 through 2014, with 222 promoted to industry partners and drilled. Now, you achieved an exploration drilling success rate of 78% on your 3D projects. Your presentation says you have the ability to find oil and gas in all cycles of the E&P business. So describe how your process works.
Well, as you pointed out, Sam Banks has had a long track record of success, bringing very good quality exploration prospects to the industry. Other significant industry players have been willing to pay a promote to have a piece of these exploration prospects. And so the way it really works is it's really no secret. We evaluate the available information, whether it's 2D seismic information or just the existing trends. You start with a really good exploration staff, equal to the best in the industry. You evaluate that data and you look for areas where there are no 3D seismic surveys shot. And you shoot the seismic, you identify the prospects, you lease those prospects up, and then you promote them out to industry, typically for a third for a quarter type of a deal. And that's really how it works.
Well, let's talk a little bit about Yuma's debt to market cap ratio. Okay, it's right now 56%. The median debt to market cap for the micro cap E&P companies that are in the Enercom Analytics database is 475%. Now, those companies are carrying 8 times more debt than Yuma compared to their market caps. Can you talk about your balance sheet and liquidity?
Yes, I can, Angie. First of all, Yuma is a conservative organization. We're very mindful of our balance sheet. We watch our cash flows. We're going to continue to be conservative. Right now we have a bank line of credit of about $35 million. We've got $8 million on our balance sheet, so $43 million worth of liquidity, and we've got $29.9 million of debt against that liquidity. And so we're conservative. We're going to continue to watch our balance sheet. We're going to continue to manage our cash flow, and we just believe that that's a type of philosophy you need to weather conditions like what we're in today in a low price environment.
Right. All right, let's talk about the Masters Creek asset. You've said that Yuma's core focus is the sweet spot of the Louisiana-Austin Chalk Formation. Now, how economic is Masters Creek at today's prices, and what are your plans going forward?
That's another good question. Masters Creek represents 80% essentially of Yuma's proved reserve position. We are in the sweet spot, and it's just by coincidence. We've been working internally to set up our next drilling campaign. We just revised our AFEs, and we've come up with 2 wellbore configurations. If you drill the wells with a single lateral, essentially 7,000 feet, the AFE costs are about $8.55 million. At that AFE cost and at current oil prices, at $45 oil, that generates about anywhere from a 35 to 40% rate of return. And so our plans for Masters Creek is to look for an industry partner. It is a capital-intensive program. To help us accelerate this program, we hope to spud our next well in Masters Creek in the first quarter next year, by the second quarter by the absolute latest. And we'll see where that goes. Now, it's all going to be a function of cash flow, liquidity, and whether or not we're successful attracting another partner to help us in that.
Excellent. All right, let's go ahead, Paul, and look at Yuma's 3D prospects in Louisiana. Which ones are you putting capital towards in 2015, 2016?
Okay, well, we have 2 3D seismic shoots that we have under our belt. We have existing discoveries on both of them. We have our Amazon shoot just west of Lake Charles, Louisiana, and in Livingston Parish we have a Livingston 3D that we also have multiple discoveries on. And in 2015 we've drilled on both. In Livingston Parish we finished drilling our Blackwell 39-1 well. In the first quarter, we brought that well on. The second quarter, it's currently flowing over, it IP'd at about 300 barrels a day. It's currently producing around 100 barrels a day. We also drilled in the first quarter on our Amazon 3D, our Anaconda prospect. The well name is a Talbot 23-1. We brought that well on the last week of June at 7 million a day, 180 barrels of condensate a day at a flowing pressure of about 9,300 pounds. We are currently in the process. So we produce over 0.2 BCF from that 4-foot interval there. We're now in the process of moving up to the main portion of that hackberry sand, and so we've had a lot of success on both of those. For the rest of this year and going into next year, we have a Tuscaloosa prospect in our Livingston 3D that we hope to get spud before the year end. It's economic at today's prices, and depending on liquidity, on cash flow, on debt, and other opportunities, we have other prospects on both 3D seismic shoots that we'd like to drill in 2016 as well.
All right, Paul, in your presentation, in your near-term growth strategy, you mentioned 3 specific tactics: pursuing acquisitions, drilling your inventory, and pursuing a partner in Masters Creek. Is growth coming from a combination of all 3, or is there a primary focus? And then twofold, long question here, Paul, what makes a good acquisition target for Yuma? So kind of cover that general topic.
Yeah, that's a long question, so be prepared for a long answer.
I'll let you look at it and watch.
That's okay. No, there's a reason why we developed 3 legs to our growth strategy stool, if you want to call it that, our growth strategy. Yes, we're going to continue to drill these prospects that we already have in inventory. They're economic at today's prices, so we're going to continue to do that. Masters Creek represents a big portion of our portfolio, so we have to get started with that. So we're looking for an industry partner there. But with respect to acquisitions, we're doing several things on that front. We're doing small acquisitions of working interests in properties that we operate from our partners. Some people have exhibited a willingness to sell, so we're buying into some of the properties that we currently operate, and those are really attractive and accretive acquisitions. We're also looking at asset acquisitions, and we're also looking at some M&A type of deals. In this environment, we've had several people come to us with opportunities. Things haven't worked out. We're being very discipline associated with the types of acquisitions we're going to do, but we're hoping that through the M&A activity that we can also springboard into some serious success. So the last question you said, or you asked, was how does it, what's the ideal type of acquisition we're looking for?
Yeah, good acquisition target for Yuma.
You bet. We're looking for existing production that is cash flowing at today's prices. Hopefully it comes with either additional development or exploration opportunities. It's not necessary that they're commercial at today's prices, but they need to be commercial at a reasonable price, say $60 or $70. Our hope is to acquire properties that are cash flowing, that bring those opportunities so that when prices do rebound, we'll be loaded with an inventory ready to drill and grow.
Well, good job on quite a doozy of a question. All right, let's get into some final thoughts, Paul. Where do you think the industry will be in 2016? I know you don't have a crystal ball, but we'll work on that. And if the pricing environment stays where we are now, what does Yuma want to accomplish next year? So where would you like it to be? And if it's kind of where it is now, what would you like to accomplish?
Well, you're absolutely right. Our crystal ball is very, very cloudy, okay? Let's just say it that way. And so really, I don't know. I can see the environment could stay the same. It could actually get a little worse. There are a lot of forces out there that could cause it to get better. So we look at it from the standpoint, again, we're going to maintain our balance sheet. We're going to watch our cash flow. We're going to continue to pursue the 3 legs of our strategy stool for growth. And so we'll continue to drill the prospects that we have internally that are currently economic at today's prices, and we're going to push our Masters Creek program, and if we're successful on the M&A front and growing the organization, we'll be a much larger organization next year or the year after, and poised to grow.
Well, I can tell by our prior conversation before the interview as well that you're really excited about Yuma Energy's story.
Well, yes, I am. That's the reason why I joined Sam and the rest of his team. I mean, what Sam brought to the industry and has with the industry is really equal to the absolute best explorationists in the world. And he's asked me to build and bolt onto that a production and operating drilling team. And so we're building a true E&P company. I know we're new to the market. Most people don't know who we are, but we've got a great story. We've got a great growth strategy. And yeah, watch our stock. Watch
Well,
our stuff.
I love your enthusiasm.
You bet.
It's infectious, you know, in a downturn to have this kind of excitement.
Oh, yeah.
And I feel that the mood's very positive at the conference, don't you?
Yes, I do,
Yeah.
and it's very well attended. This has been a great conference, a really good conference for Yuma. There's been a lot of expressions of interest in the programs that we're pursuing, and so yeah, this has been a conference that we'll for sure want to attend from here on.
Excellent. Thank you, Paul. All right, Paul McKinney. He is the Executive Vice President and Chief Operating Officer of Yuma Energy Incorporated. I'm Angie Austin with Oil and Gas 360.